We were talking tax there. Is that a big deal for you?
Well, at this stage, not yet. But if you look at our regional strategy, the US is probably the one that is most affected. All the other regions, I don't think we will see big tax increases yet, particularly Europe and Japan. We also have more monetary policy support in these two countries, while in the US, at one point, the Fed will start to taper. But overall, we're still quite risk-on. We think the macro backdrop is actually more important, particularly the vaccine rollout and the reopening up of the economy, which should lead to higher equity markets. In particular, this reflation trade is not over yet.
Okay, so when you say risk-on, and since you're talking equity markets, is that what are you recommending? Is that more cyclicals, or do I now take a look at growth and tech?
No, we are definitely biased to the reflation trade. So we like energy. We see the oil price actually has rebounded above the levels of last year before the pandemic. If you look at energy sector, it's still lagging 17% below that, particularly in ex-US. So there's a big of a catch-up play that you can actually reactivate there, and we are long energy stocks. We also like financials. Financials are probably the best sector to hedge for higher inflation, for higher interest rates. And we do think that financials probably still undervalued around 20 to 30% globally. So there's a big catch-up play there as well. And last but not least, we just upgraded Japan to our most preferred market this morning. Basically, we think that's a good catch-up play as well.
Adrian, talk to us about small caps. They had a stellar second half of last year. The Russell 2000, though, looks like it's been stuck in a range since early Feb. Is there an opportunity there?
Well, absolutely. So we went long small caps end of last year, kept it. It's still a sector that actually strongly outperforms. Now we have to say that outside of the US, actually small caps keep on performing very, very well. In the US, particularly the Russell 2000, has seen a little bit more headwinds, but we do think that CapEx will start to increase over the next couple of months, and that's usually the sector that benefits most of CapEx spending. And therefore, we do think that's actually a catch-up play, particularly in the US over the next couple of weeks.
OK, Adrian, and we're going to switch now to alternative assets, because I know you're focused, of course, on Art Basel, which is taking place in Hong Kong, of course, in partnership with UBS. What is the art market, the global art market, looking like?
Well, look, the global art market is a reflection of what happened globally. So it got impacted, of course, by the pandemic. Last year, revenues were around 50 billion, but it's down probably 22% from the year before, and it's also down from 2018. So definitely got impacted. But we also saw a shift to more digital purchases. So online purchases actually accelerated quite drastically. They almost doubled to the year before. And we do see that, particularly in a high net worth area, people are actually willing to spend more, probably because they can't travel and they were looking more online into what they can buy.
Now, China's obviously been a very big part of the art market recently. And the narrative, Adrian, last year was the economy didn't quite get hit as much. I'm not saying it didn't get hit. Of course, there was some damage there as well. What is that art market looking like, demand from Greater China?
Well, China has actually regained its position as second largest art market last year. It's now ahead of the UK. It's roughly 20% of the global market. The US is still 42%, so it's the biggest market. But we clearly can see that, particularly in the second half, when China started to reopen up, when the pandemic was less of an issue, then actually the sales started to pick up in China quite strongly. And we also have seen that among high net worth individuals, a large group, actually 26%, spent more than $1 million in art, and a lot actually did it online. So China has become a driving force of the art market, and that probably will stay with us.